Good evening, excuse me, and welcome to my end of the week recap here for the S&P 500 and plan ahead for next week. Ended up taking quite a few trades in the SPY on a couple of days here. First of all, Monday, tried these 275 and a halves at 88, same day expiration, trailed me out here 75. Later on in the day, tried the 274 and a halves here at 95. Did take half them off on initial pop up at 108, and the remainders took out all the way over here at 106 and a half. So that one ended up making up for the first one in a little bit more green. I also added to my November 9th 280 calls here at 206, which took my average down to 345. And you'll see I've averaged into that play a few too many times. So um, gap down on Tuesday. This was also where I added into these same 280 calls here. Took my average down to just over 2.25. Also took another play, really hammering away at this S&P SPY swing trade. So feel very strongly we are going to bounce hard at some point, and I want to be positioned for that. So anyways, this play, the 31 December 300s at 31. Nice break above the opening range. Did go a little bit profitable towards the end of the day, and then Wednesday completely erased all those gains. Um, on Wednesday, I also added to my June 2019 325s. I had an outstanding order at 50 cents, which did not fill the prior day, and blew right through it and gave me actually a little bit of price improvement here at 47. So my average on those is now just over 0.61, and still holding that one. So right now I am in three swing trades. I'm also in those December 313s, which I held far too long and they're worthless. So it is what it is. Fortunately, I've been in some short positions as well that have worked out very nicely. I've taken a few other intraday trades, but the chart started getting too cluttered with some of the notes, and um, I've just been over trading the S&P, so I don't want to put a lot of those notes on here. Anyways, today I also added to these 280 calls again here at 55. Got my average just under $2, so that's at least manageable for me right now. The size is a little bit bigger than what I really wanted, and I will look to reduce the size of that position very soon, as quickly as possible. There are a lot of overhead resistances. We have trend lines, moving averages, price levels, all kinds of things. We have a potential new higher low here today for at least some support. It's worth pointing out these two huge volume bars here, end of the day, 13.5 million in 5 minutes, and then today just about 12.5 million. So a lot of volume coming in at lows still. It looks like it's one of those excuse me, times in the market where it's sell to close, sell even harder on the next open. Bears are really having a field day with this. I congratulate you again. You've had a really hard couple of 7 or 8 years, so if you're finally getting some wins out of short in the S&P, congratulations. However, most retail, I doubt you're even in this. You're just bragging about it being sold off. But anyways, that's neither here nor there. On to my trade plan and what I'm looking at. Excuse me, for next week. Big earnings next week is Apple. A couple other names earlier in the week. With the way everything has been going with earnings, I don't see anything pushing the markets up yet. As I said, I expect there to be a hard bounce at some point. Every time we've broken below the 200 SMA historically, there's been a nice bounce, a very, very nice bounce, except for those financial crisis years. So I don't think we're in one of those types of environments. But again, I'm not an economist. I'm not a financial expert. I'm a technical analyst, and I trade the stocks how I see them. And right now, I have no problem admitting I am wrong in the S&P 500, but I'm still within my comfort zone. I'm not at risk of blowing up my account. I'm simply positioning myself for the bounce that is surely due. So anyways, a couple of notes I have on here. Initial target here is 271 and a half. It should be able to get me out of some of those 280 calls with some green. Next target up here is going to be 276, and then above there is the 50 SMA way up here. So still have these green bars noting where significant volume has come in. Initially was over here at 280. Second time was right here between 273 and 270. Actually, when it hit 270 is when a lot of volume started pouring in. You can see these volume bars over here. And then, excuse me, this week between 267 and 264. So volume is actually coming in lower and lower. We'll see if we can start getting a new high. Right now, we have a potential higher low just from this 262 to 264 area. Again, just like I said in Apple, hopefully that means we're at least close to a bottom. I hate trading on hope, but right now I don't. I'm really um, on the wrong side of this trade. I mean, it's obvious we're moving down. A lot of posts, a lot of analysts, a lot of participants are saying we're in a bear market. Well, in order for that to be the case, we have to have a series of lower highs and lower lows. Right now, we have a couple of lower lows and essentially a sell-off. We have something that's kind of looking like this, steep move. I wouldn't call that a lower high. I mean, it didn't even try to come back up. A dead cat bounce maybe, but just dead cat bounce, not a lower high. We have had lower lows, and we're in a very nice, well-defined trending channel. Today's bar almost, um, actually, if I do something like this before this bar was even created, we had an initial breakdown on the open, so we basically had this descending trend line. Price action broke below it and could not hold below it. So once it reclaimed it, looks like bulls were able to at least buy support and push it up a little bit. I think Thinkorswim had a misprint up here. I don't know if any other trading software has this print of this wick all the way up to the 8 EMA. If they do, then that's a legit bar, and we almost completed the whole range and almost actually put in an outside bar off of yesterday's candle. Based on yesterday's candle, it was a bullish harami, breaking to the downside, triggers stops below, just like on the way up, which I preached on ones of my videos for Apple and S&P. Inside bars are a period of indecision, especially after a huge move. We've had a lot of selling, and then there's a battleground. There'll be stops above here at 270, and stops below here at 260, call it 266. Once it broke below, usually triggers a very strong move in that direction. And since we hit support, it looks like anyways, um, maybe there's enough buyers here. Maybe we're at a prior level of support that has enough demand for price action to start climbing again. That is what I'm playing for. We have an extremely overdone move down. Based on news with China, probably going to be resolved. Now it's just going to take some time, and once that is resolved, maybe we'll get back to business as usual. But for now, bears are definitely in control. I can admit that. I can see that. I know I'm on the wrong side of the trade right now. I'm just looking to manage it as best as possible and get out for at least some green, have a nice win. Um, really don't have much else other than to go over the higher time frames again. The monthly bar here this month, October, has taken out 1, 2, 3, 4, 5, and on its way to trying to take out 6 months. Again, this is just below the opening price of the year at 260, 267.84. So if we get back above there, the year will remain green and will be a huge indecision, a big chop year, just like what happened in 2015 and in 2016 until it started to continue the upward trend. For now, zooming out, still, you guessed it, in an uptrend. So tremendous amount of volume here on the month, 2.7 billion shares so far. Only been a few months in recent history of that much volume, so there's a lot of participation. There's a lot of profits from way down here to be taken, and if anybody was lucky enough to be in from way down here in the hundreds, maybe they're taking profits up here. They're more than they've more than doubled their money. So monthly time frame, very overdone move, looking for a bounce. Even if it's a dead cat bounce, I'll be able to get out of some of these calls. Weekly time frame, tremendous amount of volume here this week at 900, almost a billion shares, 932 million shares right here on the week. Not necessarily the highest volume week, but just looking across here, it is one of probably the top 20, at least since 2011, 2012, one of the top 20 volume weeks, coming off all-time highs. Looking for it to find some support. Worst case scenario, in my opinion, is going to be this 250, 255 area. Below that, this year is obviously red and turns into a huge reversal yearly candle, which is going to be ugly. I can pull that up here. As of right now, this is the candle we're looking at on the year. If we do come all the way back down here, this would be a huge red inverted hammer candle. We've only had a couple of years. Um, that have actually closed red. So based on that fact, I don't think it's too likely that we actually close the year red, although it's not impossible. I have a note over here. October of 2014, October, oddly enough, it was just a coincidence, was the last month that price action was able to push down, reclaim the opening price, and rip back up higher, as you can see, leading to chop into 2014. So maybe we have a repeat of that, but if that's going to happen, bulls really need to start doing something right here because it's not looking too good. So for now, I'm going to do my best to manage the positions I'm in. Luckily enough, I'm not in anything that's going to absolutely stop me from trading and crush my account. So it will hurt, I will admit that, and we'll see what happens going forward. If you have any questions or comments, please feel free to leave them down below. You're welcome to come join me and trade and follow along with some of these trades live over at the Trade Crew chat room. It is a free chat. Please have a good weekend and good luck on Monday.